Good morning, everyone. Microphone check, screen check. Well, I know the microphone on the side of the on the VIP side is working well. We had a little bit of pregame going on. Not a ton, just talking about some S&P early morning setups here. Hopefully everyone's doing well this morning. Looks like everything's working properly here. I do see the question. I'll get to that in just 1 second, and then we'll cover the volume for rollovers. Are you using Ninja 8? I'm hoping so. Good morning, mic check. Looks like everything's good. Welcome. Good morning, SSFTG family. I hope you all had a chance to rest up, get ready for the day ahead, all that fun stuff. As per the usual, make sure to read through the morning prep PDF on the right side there. Very important to go through and understand everything that is inside there. Just a quick note for you all before we jump on in today. If you're watching on the YouTube side of things, the stream does have between like a 5 and 30 second delay, which will definitely impact the timeliness of what I may be talking about at any given moment. And then, of course, just like we do every day, I also want to take a second to thank all of our new members, subscribers, Academy students, VIPs, and everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. Welcome to the SSFTG family. If you aren't a member yet, you have several different options to check out if you're looking to further your trading education and career. A lot of really cool options, in fact, a couple new ones that we just launched recently here. The easiest way to start out, though, is to join as a member on YouTube. It gets you in the chat room and a bit more behind the scenes and what's going on, or if you want more info on how we do everything and everything that we have to offer with over 19 hours of video course material and a heck of a lot more, swing over to the main page at ssftg.com. So whether you're here for the very first time or you're a VIP vet over on the dedicated stream, welcome. I'm glad to have you trading alongside of me this morning. Take a look at these crazy markets, see what's going on. Take a look at some charts, maybe some news. There's not really a whole lot of news. Well, if there was, we'll see what else is going on, though. The first question that I had this morning before we jump in, don't forget to grab your morning DP levels, was double checking the volume and seeing, how do we know we're on the right volume? So the easiest way is to go into the NinjaTrader new and then open a, where is it? Market Analyzer. So you go to new and then Market Analyzer. And then from there, what you want to do is just simply type them in. So if I want, let me not cover those up real quick. If I wanted to check the MNQ 921 versus the 1221 rather, then I would go NQ space. It has to be written correctly, so I'll say all of the characters. So NQ space 09-21, enter, and that will pop up the NASDAQ 921. And then you, same thing. And again, if it's not working, simply click on a blank space somewhere inside here, and then just start typing on your keyboard. So NQ space 12-21, enter. And now I can see the volume differential between the two. So as an example for this, the NASDAQ 921 is trading 53,000. The NASDAQ 1221 is trading 90,000. So then I would rather trade the NASDAQ 1221 because it's got the majority of the volume. Even though it's still kind of split yet, but that's how you do it. And it goes for any market that you want. You just type them in there. Yeah, no problem. All right, so again, don't forget to grab your morning DP levels. Those are posted for you in the Major 7. NASDAQ, S&P, Gold, Crude, Euro, Bitcoin, and Ethereum. Don't think you got away from it. There's still a race every morning. We got to get it in there. As far as the news calendar is concerned, there's nothing. We had the 8:30 news, the CPI, that definitely jump-started things. But past that, there really isn't anything going on. So we were talking about some early morning potential going on with the S&P and everything moving around with the S&P. Some really nice opportunities setting up there, in fact. Now, since then, it did kind of dip underneath the low and did a few things that it didn't want it to do, so we have modified it since then. But before we get into that, let's take a look at what all is going on here across the board. Start off on the NASDAQ and take a look from there. So from the NASDAQ's perspective, the market's still grinding its way lower, and if we look at it from the top, which was... Which one? It's got to be that one, right? Yeah. If we go from the top all the way down to the impulse low, just to figure out where the volume's at, it's probably bugged. Yep. As per the usual, right? Let me roll this a little bit further forward. There we go. So the POC on this volume is sitting up at 15,620.75. And if we look at this from the perspective of logical common sense, assuming that there's going to be some FOMO, right? A lot of traders chasing this market to the upside. What would the anticipated volume be here initially? right? Initially, my assumption would be that these are buyers. They're looking for this thing to continue. So the market makes a new high. It's pulling back. Buyers buy into it, assuming that we're going to go back up to the top, but it does not make a new high. All right, no big deal, whatever. The market always goes back up, right? So let's buy the double bottom. So they buy the double bottom, and it fails to make another new high, right? So we churn underneath that area, and it comes back and allows them, if you look very, very closely, it allows them out at near break even a couple times, and then makes a higher low. So maybe, right, putting this into perspective of bulls who potentially have a lot of zeros in their accounts, right? Buyers trying to buy, they buy the new dip. We have a higher low, like, hey, maybe that's the shot. Let's give this one. And that makes a failure, right? So it's like everything hinges on, well, just don't break down. As long as it doesn't break down, it's fine. And they buy into the next one because it doesn't break down. But that doesn't make another high. And then the bad part happens. They finally break. Right? They finally churn underneath that low and say, nope, you don't have it. So when the market came back, everybody started jumping ship. They're like, nope, I don't want it. No thanks. So that's kind of my concern right now is that, well, although the POC break even is up here at 620.75, structurally it seems more like the bulls were buying at the range lows. And from a volume perspective, it'd be right about there. Give or take 50, well, what is that? 565-ish. So if the bulls can make it back above that, things change. But until then, they've got some proving to do. Over on the S&P, we are combining a lot of areas of interest on the S&P for a major bounce zone. As far as the POC is concerned, looking at it across the board, this one's probably bugged too. Yep, of course. Let's just go all to the end. All right, there we go. And the POC here is back up at 45.1550. The major objective, realistically, if you look at this, 4,500. That's where all of that volume was. The only reason the POC is here at 1550 is because there was likely a monstrous-sized break-even that got filled on that pulse higher, as well as short selling for a lot of reasons we talked about yesterday. And this is the only reason the POC took over there. Don't get me wrong, that's still going to be a major zone of interest, but the majority of the volume in terms of break-evens are hovering a little bit lower, right around the 4,500s. It's a very logical area for the market to want to climb back up to. So far, we haven't had a new high yet. So from a structured high, we've still got to break some. We've still got to break some momentum to the upside, but we are seeing some inside highs and some decent gumption to the upside. They've just got to follow it through. On gold, speaking of gumption, jeez, oh Pete's, this thing just rocket shipped to the highs after a. This is although it's not a perfect pip, a pick your pocket stop. That definitely feels like one. That feels like a pip stop right there. We've got a real vicious dip, and a lot of it happened on the news and then reversed all the way back up to the top. How's it going, Ace? And now that we've reversed all the way back up to a new high, there's some pretty obvious concerns, right? Like, if this is going to continue the bear struggle to the downside, then we should have been holding resistance along the way here, and, well, unfortunately, that didn't work. They broke above that. With that failure, and given the trap on the bottom, I mean, just put this into perspective of this going maybe a little bit further up even, breaking above the highs, really proving it, higher low pullback. Even if it gets way back down here, that's fine, because the risk reward is nuts. Right? That's the hot spot. That offers up all the way back up to the highs is crazy. So major zones of interest here on this reversal to the upside, but a lot of bulls would really like to see this crack the 1806s just as some extra proof. We'll see. Crude oil continuing its rally to the upside, and overall, as far as crude oil is concerned, one of the big things that happened here on crude, very similar to what we just looked at, there's another pip stop, they jumped down, took out the pip lows, picked their pockets, and ran away all the way back up to the highs. This is where a lot of FOMO sets in, right? A lot of buyers trying to buy in, they missed it, they got stopped out on the lows, they're chasing it all the way up. They wanted to buy the pullback, but the pullback never came, man. It just kept going all the way up. And when you have a situation like that, FOMO is at an all-time high. So where are those FOMO traders likely going to be coming in? Well, realistically, let's look at the rotation first. We've got an L5. A lot of FOMO traders are probably going to be buying on the L1s, right? Now, so far, that FOMO has worked. It worked. Now, again, that's the beautiful thing about the markets. It doesn't matter if it's a bad probability trade and you shouldn't take it every time. There are going to be times where it still works. These are the ones that reinforce bad habits, side note. But when you've got this massive rotation to the upside, after an L5, an L1 is not my first inclination, right? That's not where I'm thinking the market's going to pull back to. I'm thinking L2, and we're talking, crude. This thing could even possibly get a vindictive little slip into L3, L4. We know how that goes. But, the big psychological level is at 70. And we've got the L2 hovering right at 70. Previous, quintuple top breakout, that's right at around 70. Structural psychological supports right at 7. I mean, everything is right there. So bulls trying to buy too high, they put their stops underneath the lows, the market flushes back, takes them out, and then goes screaming to the top. That seems more like the crude oil I know. Okay. Now, it doesn't mean it has to happen. Of course not. But that feels a little more like home, right? That's more vindictive. That fits the bill. It just, man, that fits. So I would really, really like to see a dip down into these L2s. 69.85s would be the zone of interest. And realistically, from that perspective, if the bulls are going to hold this, they shouldn't need much risk down into the L3s. And if they're going to hold a perfect one, that's going to be right there. That allows 3-to-1s all the way to the top. So, I mean, this is a really nice area. I would like to see if maybe even we can get one just a touch lower down in the DP. And then I can widen out a little bit. We've got the smaller one. And then the wider one. The first one is a 3-to-1. The second one is a 2-to-1, or at least it should be. If my mathin's right. Oh, hang on. Let me get it in the right spot. There we go. Yep. So the targets land. I mean, they land right about on top of each other, but one's a 2-to-1, one's a 3-to-1. Same difference. Nice zone of interest. This one, I will say, the probability of success is incredibly low. But if you look at the reward, I'm okay with that. That's fine. I'm looking at a probability of success on this at about 27 to 30%, which at a risk reward of 3-to-1, or actually this looks even closer to maybe even 4-to-1. That's fine. I'm okay with that. If we're looking at it from the widest perspective, here to here, that offers up that 2-to-1, or even at worst, a 1-to-1 all the way higher, even though that's not how I'm managing them. So we know that even at worst, we still have our stuff in the right spot, right? It's not like it's a lopsided risk reward or anything like that, although it would be preferable to have it hold more on the upper portion of that L1, or sorry, L2. Over on the euro, more continuation to the upside, and the big thing that the euro needed to see here was this break of the falling resistance. We had that leg down, and the question was, is this a reversal, a higher low, higher high? What's going on here? Technically speaking, we do not have a broken confirmed swing. That hasn't happened yet. So, I mean, technically, it's not a trend reversal. Man, it feels like a trend reversal. It looks like a trend reversal. It smells like a trend reversal. And it kind of tastes like one, but we're not quite sure yet, right? It hasn't proven itself yet. Now, from a POC perspective, of course, it's bugged. So if we go all the way across, I guess I'll just get the developed one. 18475 is the POC that we're leaving behind. All of these things are suggesting that the trend is reversing, right? Like I'm saying. But we don't have that new confirmed swing. And until that happens, we don't technically have the proof yet. Kind of a bummer, but got to give it a little more time. Bitcoin's just going sideways. It feels like they trapped everybody on the lows. Anybody who had their stops underneath the base who didn't realize that they had to risk underneath the major low, they got wicked out. They got pipped. Pick your pocket. Right back off. Now, we haven't broken the highs, but man, it feels like that's just right around the corner. Obvious zone of resistance is going to be the top of that overall back and forth that happened. It's a train wreck. It also lines up with 47,000. And if we go backward, there's a very big amount of resistance built up at that previous zone, just a little bit above it. 47,200-ish. So, I mean, if the bulls are going to take over, what would be really nice to see is a crack above that. Get into no man's land up here. Even at an L3, a 2DP to the upside, and have a reversal back off, that's fine. Because that's still proving what the market wants. They're looking for that continuation up. If they fail, though, then that changes things a little bit, but we'll see. Ethereum, again, is kind of in their own plane, but very similar situation in terms of the trap. We just haven't had a rotation to a new high. Kind of waiting. Hey, Steven, how's it going? Good morning, good morning. Crude oil's waiting, and that's about all we're waiting for. As far as the S&P is concerned, we were talking about this in the Discord chat earlier, as far as the S&P building up a very nice zone of interest. Where does that interest come from? Well, it comes from a 60-minute chart. The 60-minute chart is a major pullback to a literally a perfect structural zone of interest. You cannot get better than this kind of structural interest. We have our 5-wave pulse to the upside, which again was really kind of like, I don't know where the heck this thing is. You know, is this the high? Is this you know, what the heck is going on? It was a real mess up here. How's it going, Zach? But once we solidified that high and rotated down with a little bit more emphasis, it was pretty clear that we've got a wave 1, wave 2, wave 3, finally, wave 4. Now, that's the reason why I'm not so interested in buying this first time around, because we haven't even completed 5 waves down. That would be the minimum anticipation, and those 5 waves down should be down to the wave 4 of the preceding degree and all those fancy words like we talked about in the VIP webinar a couple ago. That's the idea here, right? This is where bulls are starting to take over, but I don't necessarily want to be the first one to the party, and it made a lot more sense to wait for that follow-through rejection. But when I tried getting in, it was here, looking for the continuation up. It failed down to a new low and then reversed higher. So from my timing perspective, my timing was off by 1 leg. Now, if I were trying to buy a little bit later, I don't know that I would have had a chance to. So, I mean, be thankful for what you got, I guess. But the way that I managed this, because this new low did happen, which was not what I wanted to have happen, otherwise I wouldn't have bought there, I was still willing to risk down to the major lows. That was fine, but I only had to risk down to this point. This was an invalidation of my original trend perspective. I wanted to see this go pulse, 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 5 waves up, right? Finish the job. It did not. It rotated down to a new low. That doesn't mean the trade is invalid, but it does mean that I have to modify. I'm not looking for a 3-to-1 anymore. I'm looking for a scalp. So that's exactly where all of those exits started taking place, when we were at or above the scalp area. Now we're bouncing off of it as a zone of support. That's a good perspective for the bulls to keep this going. But that was the earlier morning trade that we were talking about in the Discord. Set up nicely. It was a little early to the party, I guess. Nothing you can do about it. Aside from that, so far this morning, nothing else really going on. I mean, man, they tried getting this cycle going. This is a funky cycle, because they didn't start it until right here. So they had like an attempted bear channel to the downside, which failed. And then they tried getting a bull channel to the upside, which failed. And then they finally got a bear channel down, but it looked like just an absolute train wreck. And it did finally complete, right? They finally had a break and a leg down. Once they finally got that, man, they followed through. They're like, oh, man, finally, yay. Really big pulse to the downside. Heavy correction, though. A lot of traders likely were not anticipating that correcting that aggressively. And if we measure the volume off of the top to the bottom, we can see what's going on here in terms of flow. Wow, okay. Jeez, oh, Pete, man, they bought that heavy. What about before all those bottoms? What about just that low? Okay, so this is, geez, really? That is absolutely ridiculous. So they had their POC up at the top, 44.68. If these were bulls, they got absolutely dumpstered. If these were shorts, they worked out phenomenally well. So much so that they actually created the POC at the bottom that reversed the market back up to where? That's weird. It's almost like they came back to a break-even point. Wow, funky. A lot of traders go to break even, and when you go to break even, a lot of traders will re-up their risk, right? If they've had a really solid trade, let's assume for a second that these were shorts. This move, obviously, to the downside moved 2-to-1. In fact, it moved 3-to-1. It actually almost moved 5-to-1. So with that momentum to the downside and that amount of continuation, realistically, I mean, those sellers were satisfied. They got their targets. So when it comes back to break even, right, let's say as an example, they shorted 10 contracts back here in and out, you know, in and around that zone. Just, again, for the sake of argument, it makes math easier. They have a cycle down. They scale out of their first objectives, maybe half of their position. They scale out of their secondary objectives with another 2 or 3 contracts, so they've got like 2 left. What? Thank you, alarm clock. Try that again. They scale out of the first one. They're short from here. They scale out of the next one. They scale out of the next one. They've got 1 contract left, and it goes back to break even. So this is what their choice is, right? Their choice is, okay, I can give back about half to 1 of my first trade, right? If they got their first one off about here, which is where the bounce was, then I've got to give back about half of that, but I can re-enter another contract. That means that I'm giving back 1 R, effectively. You're going half and half, right? 1 R. So you're adding 1 additional R of risk for a potential re-up on the 5 to 1 drop. You've already got the half to 1, you've already got the 2 to 1, you've already got the 3 to 1. The last objective to the downside is a completion of a 5 to 1. Your risk is effectively this candle. That bull bar, closing wick, you know, whatever, if they're shorting into that, which by the way, that was to the tick. So if there were stops resting at break even and there were a boatload of limit orders that were waiting to gobble them up, and you see a candle that happens like that, you better believe sellers are slamming this thing. And when it reconfirms like that, holy moly. So look where the market went back to when it hit that zone. Right? Let's go back above the highs. Remember, they already hit the 2 to 1, they already hit the 3 to 1. So where are they likely going to go? 5 to 1 completion. To the tick, done. That's why I love break-even re-ups when they hit. Because the risk is so incredible. I mean, if it closes above it like twice, it's done. I'm not interested. You know, it's basically an immediate rejection, and the reward is nutso. But we've completed a major seller's objective to the downside in an otherwise bullish trend, right? So with this bullish momentum to the upside, then we've got to ask ourselves, wait a minute. This full reversal all the way in the opposite direction, are traders going to be looking for a full flip into an L1? And they did. They bounced off of it, continued back up. Now they're holding another barely L1, but we're going into the open in about 8 minutes. So, you know, this is the kind of thing that we're looking at for a continuation up. Everything is lining up. They did it incredibly vindictively for that 5 to 1 completion. I wasn't expecting that 5 to 1 completion, obviously, otherwise I would have gone long later. But, you know, they still got the job done. So noting that they're rolling back to the upside, although I had to modify per my plan to modify as a scalp, I only had 3. If you have more than that, there is a reason to believe that there's a potential chance for more. It's lining up, right? A little bit frustrating that the 60-minute closed directly on top of the scalper's target. That kind of sucks. But, you know, oh well. The 15-minute chart's above it at least. That's something. Isn't it nice when everything falls into place like that? It's just perfect. It doesn't happen very often, but those are the ones that it's like, okay, now take a screenshot, because this is the one that when you do a Google search, you're going to find, but almost never happens, right? That's the one. All right, let's see what these traders are thinking. As far as the overall momentum back and forth, we've got crude oil, which is still waiting for the deeper pullback. We've got a 3 to 1 and 2 to 1 built in. Between the two, it averages out to be a 1 to 1 between all of them. Although realistically, if it does end up in that spot, I'm exiting along the way, so it's not going to be treated that way. First in, first out. Technically, per NinjaTrader, when it calculates, it would be this one first, and then this one second. So that's how I have them measured for my risk reward. And a 2 to 1 and 3 to 1 both line up in the same spot. So man, talk about a major objective just hanging out in the sky on the index markets, huh? That POC hanging out in the clouds. It's just begging for it. Bull engulfing bar, S&P scalpers may be looking for a pre-market rip into the highs, buying above the last one at 76 quarter. Looking at yesterday's 5-minute, we did finally complete that candle gap objective. Man, talk about an immense amount of support there, huh? They did work their way through. Nice resistance zone. Tried getting it going back further, but failed. Reversed all the way back up. Just didn't stop going higher. That's crazy. 5 minutes until the open. As far as the NASDAQ is concerned, I mean, realistically, it doesn't have a whole lot going on. It's trying to get the continuation to the upside, but it's just not really getting it going. You'll notice, just as a total side note, you remember we were talking about how yesterday, if the market's telling you that you just don't have it, it's time to exit, and we exited, and then it immediately tanked shortly thereafter. You'll notice the traders who may have been holding bags, where did the market come back to? Oh my God, get me out. It's like, please. They hit the escape hatches fast when that thing came back. Right? These are the major zones of interest. If you know they got dumpstered and they didn't get a chance to get it, that's, I mean, I wasn't really watching it at that point, but those are big zones. Interesting how that works out that way. With some fresh eyes looking at it a day later, you know. Now we're above that, right? So keep that in perspective. If these traders felt like they were stuck, they're like, oh man, please, oh no, I missed my opportunity, come back, get me out. Oh no, I didn't get filled. Oh no, right? We know that feeling. I didn't get filled. Oh God, all the way down to the lows, takes the stops out, right? Rips the stops out. They get the now maybe there are some longs who still hang out. Finally comes back. They finally get out of break even, and the market tanks all the way down to another new low. So the fact that we've rotated above that, a lot of sellers are going to assume that this is going to keep going. But it reversed. So 2 of these legs would make a lot more sense. And that puts it right back up at about those previous highs. Looking at it from a rotation perspective, they did technically make a new low. So off of that new low with a rotation higher, we have an L3. It's a disgusting L3, but it's an L3 all the same. After the L3 breaks, you're expecting an L1. It hasn't had an L1 pullback yet. It's missed them all, on all of them, actually. So an L1 pullback begins at 473.25. We have the open around the corner. So understand the risk associated with this. You've got the open around the corner. Things can get really weird, but it's looking pretty strong. As far as the overall continuation, I don't mind this for a little bit of a wider risk perspective. We'll see how they want to play it, but initially, I would like to see it just hold up at the highs and then get a 3-to-1, or I'm sorry, a 2-to-1 bounce to the upside. Boy, that just fits. Cool, man, that red badge popping up. That thing stands out. How's it going, Bram? Got the open right around the corner here. 928's the next volatility point. Sheesh. My son did that back to me yesterday. I was kind of proud and kind of concerned at the same time. I don't know if he's old enough to... Extra continuation, possible bears. 928 really didn't do anything. Kind of disappointing there. As far as a bullish continuation up goes, I mean, man, this channel is just up in the stratosphere. We've finally broken it. Realistically, we should have another continuation back to the highs. That's the anticipation right now. But that thing just looks like a mess. If anything, it was probably this, which has already kind of ground its way out. Ugh, what a mess. This could definitely use that vindictive little pullback into the open here. That'd be perfect. 1 minute until the open, speaking of. The fully developed POC of the entirety of the move is at 61.75 of that last pullback. Micro NASDAQ bulls have a potential swing long to the upside. There is the static approach, which is just 473.25 with likely stops at around or slightly under 61. The secondary approach would be building in with the majority of stops taking place at around the 450s or just under. But keep in mind, settlement's right there, right? We had to deal with that yesterday, where we slid at the open down to settlement. It was a little bit lower than expected, etc. I still have the same pattern. I still have to show up to the party, right? Probabilities don't care how uncomfortable this is, because I will be totally honest, it's kind of uncomfortable having that order sitting there for a long knowing that the open's right around the corner. But probabilities don't care about my comfort level. So I've got to be there, and I have to show up to the party when the party shows up. I missed my fill, by the way, by like 2 ticks. Didn't get it. We'll see what they want to do in the next pullback. That was probably the single best lines you've ever said. Very Mark Douglas-esque. Yeah, I mean, it is, but that's what it comes down to. You know, if you know your edge, then you show up to the party when your edge is there. You know, you accept the fact that it's possibly going to lose. Like, welcome to the party. It's called business. Not every business deal works. In fact, in trading, if you're a swing trader, most business deals don't work. It's just the ones that do pay for the ones that don't. Got a little, I mean, a picture-perfect double bottom at 70.5 on the S&P. NASDAQ still continuing back to the highs and grinding its way up. We still have not had an L1. Just so I can keep that highlighted. That's not what I wanted. L3. Round 2. Fight. Bum, 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 bum. See if the NASDAQ wants to show up to the party this time around. Nice little pullback, market dipping back a little bit further. Possible two-legged correction would place it at around 68.25. That also fits nicely into the NASDAQ. Now, in terms of the first entrance, it's going to be a 2-to-1. Man, again, barely. That just fits. We'll see what they want to do after that. Sellers are attempting to pressure back to the downside again. If we look at where we are from a 5-minute perspective, I gotta turn the entries off. I can't see a thing with those on. We've got, I mean, we're basically opening up right where yesterday's entry for the sellers took place. So, I mean, if the sellers are looking to re-up their shorts, this is going to be where they want to do it, and they do not want it to close above that. So, I mean, as far as a line in the sand goes, that's going to be a pretty big zone of interest right there. That said, first volume so far coming in at 73.50. We still got about a minute left. NASDAQ pulling down into the L1 territory. Upside objective at the moment on the NASDAQ. Well, we might get that second entry. Nope. Wow, really? Okay. 2-to-1 is back up to the highs. First 5-minute bar is in on the S&P. 4473.50 is the POC to start the day off. NASDAQ longs are attempting to build in for the continuation pulse to the upside. Upside target at the moment, given the hold that we're seeing here, should be up through the 2050s, but realistically, if they're going to continue further, they should be able to break above the highs and keep this train going. So, this is looking pretty strong. Creating a bit of a volume node here on the NASDAQ. We got to close above this area. It's at 950. Wow. Pulling back to the 950s, trying to hold above. I mean, really, I don't mind letting this keep going. That's fine, so long as we stay above the 950s. Dipping underneath it, taking the exit. I was only able to get the one. I came very close to the second one, but, well, nice, nice small little swing on the NASDAQ there. Although didn't quite make it up to the full objective, they did make it up to a very logical point of interest, and if it's demonstrating volume resistance there as well, it doesn't make sense to try to hold through that. If I had multiples, take one off there, leave the other one go, etc., but I only had the one, so is what it is. We've got the first bear bar starting off the day on the S&P, defending the first five's entry point from yesterday at 76.25 on the S&P. Now from a 5-minute, oof, that doesn't help. 575 is the NASDAQ's POC of the first 5-minute. It's at 8.25 now, but man, that didn't help at all. So we did have the L1 follow through after the L3, and again, it doesn't matter how uncomfortable it feels, you show up to the party, and this is why. You know, that's just how it works. Nice continuation. 508. Couldn't break above it. Exited. This could just be a break-even retest for bulls to re-up, but it could also be the deeper L2 pullback. Man, this thing's like a brick wall on the S&P. Holy crap. Anybody not home? Jeez, it's like everybody's barring the doors right now, zombie apocalypse style. It's this 74 resistance, 73.50s, this whole area. Now, I still, from the perspective of the bulls, at least, really love this support that's coming in here, gotta say. So, buyers who are looking to trap that could be looking for a trap underneath the previous bull bar's low, that kind of stuff. We still haven't made new highs. Which way do we go, boss? Now starting to get a little bit of a deeper pullback here. Maybe this is the settlement flush, you know, who knows, but based on what we're seeing on the 15-minute perspective, right now the way this looks is the scalpers tried to get something going, they tried holding above the scalpers objective, and so far they've had a massive failure to launch. So the bulls better hope this thing starts rolling back up. Otherwise, we're going to be running into some problems here. At the moment, it appears as though we're trying to get a wave 1, wave 2. We're breaking for wave 3, but I mean, so far we haven't even exceeded the length of wave 1. So at minimum, we've got to make it up to 4489 before they do anything. Which would make sense, right? That's back to the wave 4 zone of interest. It's a little bit above it, but... So here it sits. Now scalpers are losing a little bit of ground. Yikes. The heck? Man, I tell you, Steam pop-ups are one of the most intrusive things I've ever seen in my life. We've been trying to reach you about your car's extended warranty plan. It's like, golly. Minimize windows, pops up out of nowhere, comes out of bushes. Like, bro, back up. Where'd you come from? It's an L5, L2 on shorts, is it? I got an L4. L4 into an L2. L3 into an L1. I mean, it feels like the sellers are trying, but it feels like the bulls haven't totally given up. Oh, on the NASDAQ. Oh, gotcha, on the NASDAQ. I gotcha. Yep. Sorry. It feels like the market, the bulls haven't given up yet, you know? It's like they're trying to hang on to this and say, no, this is the last defense. But if it breaks down again, I mean, aside from like a wedge low, that's all that's left. If that starts cracking down, then it's a rinse and repeat of what happened yesterday. And then we see this thing drop all the way down. I tell you what looks really nice, though. Ooh, boy. Nice little trap down there in the 390s. That looks real nice. I bet there's a lot of stops hanging out down there that don't want to actually get hit. I bet there's a lot of buyers that'd like to take those stops off their hands, too. That's what's got my my eyeballs at the moment. Now that these higher low aggressive bulls are failing, I mean, assuming that we can't get like a higher low transition back up, of course. They haven't broken down again. Will there be defense over the 830 spike candle? Typically, whenever there's any major spike candle that stands out, right? So let's go the 5-minute pre-market and look at the defense candle, which happened at 8:30. The way that NinjaTrader says is 8:35 because that's when it closed. But it's the 8:35 candle. So that area is at 15,487 quarter. And look at what the market is pushing off of. This isn't giving me the warm fuzzies, okay? This is the kind of stuff that scares the crap out of me. We've got a POC up at the top. We've got resistance coming off the highs. We've got a top-weighted POC. I mean, yikes. You know, this is a valid attempt from the sellers. So 100%, yes, this will be a zone of resistance. Just like, because remember, it's a bull bar. If we get down to the lows of it, it's anticipated for it to be support. Even more so than resistance at the highs. Resistance at the highs now is more likely, just to put it into context, is more likely driven by bulls who feel like they're wrong and are exiting, rather than new sellers, right? They're still sellers, but they're selling for a different reason, okay? Rather than down here. Buyers are buying in. New buyers buy in down here because it's value. It's cheap. Their risk is very low. They can still procure the same move, but for totally different reasons. So definitely is the short answer, and that was the long answer. There you go. As far as the S&P goes, I mean, the 830 candle and the 15-minute candle were basically the same thing, but if you were to catalog it, the 835 bar was a low at 44.57. Let's make that like a lime. And the top of that candle was 76.50, which, of course, is going to be red. Let's put it on all charts so we can see it. put it on all charts so we can see it. Swap that back to 15-minute, zoom back out, and then go back over here. And we can kind of see how that's playing a role in what's going on. You'll also notice where my exits started coming in. Again, it's nice when everything lines up, isn't it? So if the market's going to fail out of one side, it's probably going to go to the other, right? Everything that's going on for the short perspective, again, completely and totally uncomfortable to take a short into this, but, well, plan is a plan. I have to. My reasoning behind this is that the bulls have lost everything they have on the Nasdaq and their downside objective. I'm not gonna MIT in, but I do want that area. The MNQ is too illiquid for MITs right now. 80 quarter would be the preference, but potentially up to the 85s. Realistically, if it starts churning up to the 90-50s, though, I'm not interested. And honestly, if it starts hitting into the 86s, I'm not interested. So if that goes to show you the type of risk reward that I'm looking at here, I'm looking at a very low probability but very high reward type scenario. And it fits with a 3-to-1 to the downside. So sellers have downside objectives for a 3-to-1. Probability of success, like 32-ish%, but for a 3-to-1, that's incredibly good. I don't want it all in one. Markets taken in. First objective to the downside is a 3-to-1. A little bit ahead of the 3-to-1. 2-point scalp off a settlement. Nice. Tried to snap a scalper's first objective there. I can't seem to get filled for the life of me, though. Scalper's first objective offsets the risk, so we can see if they can get that final pulse to the downside, because we know how they love to play games down here. As far as a secondary pulse to the downside, I'm going to see if they can extend this out a little further. If they're going to make me work for it, then I'm going to make them make it worth my time. All right. Let's see if they can go. I will give them as much room as I can, but I am not willing to accept a failure on the trade. So just looking to see if they can grab the bigger target. We've already gotten the 3-to-1 to the downside, so next targets are going to be the 5-to-1. Oh, my target's a little off. Let me get that in there. There we go. So looking for 5-to-1s to the downside to finish off the move. S&P still just churning. Which is great for the Nasdaq. Keep on going. Nice bear bar. 500, 481 in that area, down to the 455s. Yeah, the NASDAQ still kind of a herky-jerky beast, isn't it? POC settling down at 470 and closing under, which is a great continuation sign. See if they can break lower and trail this thing down. Not willing to give anything back anymore. It's either or. Keep going, NASDAQ. All right. Taken out on the trail stop. Almost made it to 5-1, but I'm not going to give any of that back. Nice slide. Got about 9 minutes, 8.5 minutes until we start hitting extended session. Start rotating into maybe more fun times depending on what's going on in these markets. Jeez. The last ditch for the bulls is settlement and previous swings. That's, I mean, if this doesn't hold, there's what else is there to hold the market? You know, I mean, from a wedge perspective, we're getting there. We're down at the wedge. We're wedge settlement down at the bottom of the spike and channel lows. So the longs know that they're able to build in here, but what's the risk? I mean, the risk has got to be below the base. So a 3-1 certainly doesn't fit. A 2-1 doesn't fit. So they have to be scalpers from here. That's the only thing that fits. And I'm just not comfortable with that. You know? No thanks. There's so much space for the market to fall apart here. I mean, they've got the spike and channel low, they've got all the traps that should have taken place that couldn't quite take place. I mean, everything that should have gone for the bulls didn't, which is why sells start taking over. So, I mean, I don't know what's left if they can't hold settlement. What else is there? I mean, there's not really anything until stuck shorts maybe at the 420s. Maybe. As far as the S&P is concerned, we've got a string of bear bars all the way to the downside on the S&P, and they are getting wider and wider and wider. So look at what happened, right? The sellers resisted their entry point from yesterday. That's also where the news candle shot it up to. So now we're getting back down to the 57s. If the bulls are going to maintain a zone of support, that's the spot. Now, to me, realistically zooming out a little bit further, I think, you know, maybe the 55s or even 53s or 52s make some sense, but the 57s would be first. No candle gapping. Very important to note. I don't believe this downward move at all because of that lack of candle gapping. It looks strong, but it feels like it's a false. Probably means that this is a POC whip back, right? So it's a valid attempt from the sellers. Let's see if they can churn back above 63.25. Very, very nice continuation to the downside. Market falling apart a little bit. Zone of support in the 57s. at least that's where they start. What the heck? Why does it do that? Wait. I thought you could drag moving averages and stuff from other charts, but when I wonder if I have them calculated different. What the heck? Yeah, they all look different. Alright, what about if I drag this over here, delete it, drag it back? Oh, that works. So I must just have these calculated different. What the heck? Okay. Sorry, just dealing with little minor issues here. We've got the S&P, which is still kind of churning its way down. Looking across the board, the other one that I was sort of waiting for is crude oil, which hasn't, I mean, it's miles away, hasn't even come back. This is starting to look kind of bad for the markets, gotta say. This is looking a little bit woeful, if you will. Sellers with more continuation to the downside, 57s being tagged. Still a string of bear bars straight down. That's the thing, like, with this kind of momentum to the downside and nothing necessarily supporting it, it makes me think that this is a false base that ends up being a V-bottom. I'm kind of looking at it that way. Granted, it looks disgusting where it is, but we do have a new breakdown in the cycle off of the high to low, so high to low. So we've got the L5 rotation down into the L2, which was a perfect rotation, and it followed it up with another L2, so we've got two of them. Sellers are going to be looking for that third one. We might just get those juicy little stops down there. Tasty. Sellers continuing down 470s. S&P's having some trouble at the 57s. Now, we do, for the first time, have some valid candle gapping. That can change things. Right? Beforehand, we didn't have that candle gapping. Now, we do. So, realistically, there are open downside objectives that are looking to complete. And look at where those are. Right at the previous swing. I mean... wow. See if we can get a little bit of a bounce there at 49.75. Initial objectives don't fit a 3-to-1. They almost fit a 2-to-1, so that means that it has to be a scalp, at least upon initial entry. So I would rather wait for a cleaner entrance then. The buyer's AFK at 57. I mean, that could be the case. Maybe he just left the limits there and now they filled and he's not even there to defend him, you know? Like, oh, crap. Kind of staring off the edge of a cliff a little bit there, but, you know, hey. $10 o'clock right around the corner. Feel free to get those last questions in. We'll swap over to the extended session for VIPs and members on YouTube, and then we'll get things rocking and rolling, see if we can get some scalps going, have some fun. Yeah, right when I switch workspaces. Bears have more candle gapping to the downside, gaining more speed to the downside, suggesting that further targets are lower. We're completing the first objective, but with new candle gaps, it means that it has a chance to scream high, farther down 42.25. I'm watching this 4448 area. I'm still suspicious of a V bottom. Let's do last call for questions, and then we'll head off into the extended session and get things going. Got 4 minutes left on this candle, so there's plenty of time for this thing to figure out what it wants to do. That little trap on the lows. Whew. There's no green candles this whole morning. Would you really buy, Steven? Ask yourself. Yeah, exactly. You know, that's the thing. If this were not demonstrating candle gapping, I would, because there'd be underlying signs of contextual weakness. It fits the bill as long as I'm okay with the risk. Remember what the risk was. You'd have to be a scalper. It's all the way down to the lows. So the only other way is to wait for more proof. And more proof is something that we do not have yet. That's what it comes down to. There will be buyers with huge, I mean, way more zeros than you and I could ever imagine. But they can buy into it, and they can keep buying into it, and they can do that till they're blue in the face. You know, congrats to them. But, you know, for you and I, we got to be a little more picky. Sometimes we can manage through those deeper pullbacks if they're unexpected, or, you know, if they still fit the bill contextually in the bigger picture. But if there's just no valid reason, or things are telling you that it should keep going, then don't try to catch the falling knife, because that's exactly what it is at that point. Beforehand, I was looking to buy because there wasn't any candle gapping, you know. Now we've got 2 candle gaps to the downside. Kind of took away my reason. Give me a big old bull bar that looks like one of these bear bars, though, and I tell you what, that reason will come back pretty quick. Still not going to buy above the bull bar, though. All right, I'm not seeing any questions coming in on this side, so let's switch over to the extended session. If you are ducking out, I hope you had a great morning. There are plenty of nice little setups that offered themselves up this morning, including a really nice one in the overnight, if you were okay with the risk, of course. That was about it, though. So far, so good. Solid day, and that's going to do it. If you have any questions that I may have missed, feel free to shoot those to me via email, jhb@ssftg.com, or you can post them in the comments below if it's a quick little note or something like that. We can get it taken care of from there. Otherwise, though, enjoy the rest of the day. For you extended session members and VIPs, just hang out for a second, and we will swap over, all right? Have a good one, and we will talk to y'all later. Thanks.